Welcome back to the show. I am joined by our good pal and friend, Tucker Maxwell. Welcome back, Tucker.
Thank you so much, Dan. Hello.
Hey, I think we owe it to the people out there to kind of get a little deeper on this mysterious organization that keeps raising interest rates or lowers interest rates or meets and talks about economic impact in banking. So let's talk about the Fed. What is even the Fed?
Yeah, so the Fed is the Federal Reserve, and specifically the folks that are raising the interest rates that we're hearing about is the Federal Open Market Committee. And those are the Federal Reserve chair or the board of the Federal Reserve. And these individuals sit across the country at different Federal Reserve locations, and they meet regularly throughout the year to control the Fed policy. And when they adjust rates, it impacts banking, interest rates across the board, and different things. But they really only control one rate.
That's it. So there's these people in a bank all over creation, and they basically just sit, or well, all over the United States, not creation, and they basically just talk about the one rate.
Yeah, so they handle multiple facets of the Federal Reserve and handling money, printing money, things like that. Their major role is to control inflation. So how much money or the supply of money is readily available for the U.S., and they try to control that to control inflation.
So they use the banking interest rate to help control inflation.
Exactly. Yeah, they handle these high level rates that then trickle down to the rest of the rates that these banks offer to consumers.
Okay, so is that the only thing they control, or they also control? I mean, it's monetary policy, right?
Correct. Yep.
Okay, so how much does that impact interest rates?
Yeah, so there's not a direct correlation between their decisions and mortgage rates. Just talking specifically about mortgage rates, what they control is the overnight rate that banks use to borrow money from one another. So every night, banks have to have a certain level of liquidity on their banks, on the documents. When they settle up every night, they have to have so much liquidity. So on a day-to-day basis, these large banks across the United States are borrowing from one another to have so much liquidity on their books. And they control the rate at which those banks borrow from one another.
So with the recent decrease in the mortgage rates, are we seeing more demand in the terms of buyers?
Absolutely. Yeah. So today they announced a 0.25% rate hike to that Fed rate, which was exactly what we anticipated. So that was good news. So I think there's a lot of people out there that, hear rates are rising, the Fed increased rates, but that was priced in. We knew that was coming. And so it actually has caused an improvement in mortgage rates. And we actually today saw a price improvement midday where lenders across the country lowered the mortgage rates at a midday price adjustment.
Yeah, I'm just looking at some Wall Street Journal headlines. So we've got stocks rally after Fed decision. Nasdaq gains 2%. So it looks like the Fed slows its tightening. So by doing just a quarter point, right? Because every raise is basically more expensive to borrow money overnight. So that's how it. And then when you have the stock market grow, then demand on mortgage bonds falls. So it keeps. Am I stating that right? It keeps the mortgage rate down.
You're exactly right, Dan. That's exactly what happened. And
I'm no
that's
economist. I just play a realtor on TV. So
yeah, no, you're spot on. What's really interesting about this is it's the media spin on it. So today the bond market has been up and down with extreme volatility because a Fed member gets out of that meeting and makes a comment to one media outlet. Another one says something different, and everybody's reaction to these comments cause bonds to go up and down and stocks to rally as well. So it's not necessarily just what the Fed does. It's the media reaction to their decisions and what they're saying that then leads to this volatility that we're experiencing right now. But the good news is we should see mortgage rates continue to drop as this tightening, if you will, loosens up.
well, and that's just going to drive our buyer competition in this market. Good news, my stocks are up too. So I just checked my Robinhood account. I'm like, hey, that's cool.
Yep.
But I've been watching it for a long time. So
Exactly.
All right. So, what are some quick tips for competing in these hot markets?
Yeah, one, Dan, I think you nailed it in your real talk segment is getting pre-approved sooner rather than later. You know, when the right home comes along, you want to be ready to move on it. Right now, we can't expect homes to last or sit on the market like we did in October, November, and December. So it'd be really disheartening for somebody to miss out on a home that they really love simply because they didn't get prepared. So the first thing is get pre-approved and really understand your numbers. Know what those monthly payments look like, know how much you're going to bring to the table to buy the home so that in a competitive situation you can move quickly for the home, because acting quick can oftentimes be the difference maker in winning an offer or not.
Yeah, for sure. Acting quickly. So I am curious if you look back at January with purchase applications compared to last January, how was it up or down? What was it?
Yes, Dan, we were up to about 25% as an industry over January of 2022, which is pretty remarkable considering rates in January of 2022 were at a fraction of what we were this January. So that
Was it
means that
like the
there was.
last week of January where you guys did that? Because I do understand it was down for a bit, right?
Yeah, it really was the last 2 to 3 weeks. So, we did have a little bit of a hangover after the holidays, if you will. And then, yeah, it really picked up in this last week. It was alarming, just a little bit of a rate improvement and the media saying interest rates are falling. And that really drove purchase applications in the latter part of the month.
I have to say, this is the most confounding market that I've seen in a long time. I think it was almost a year ago. It was like, well, we've had 2 down months of GDP, so that's what normally people have said it's a recession, but we're not saying that. And yet inflation is rampant, and people can't afford, well, they can, but the cost of gas, of eggs, and all that stuff is up. And then suddenly the housing market starts to echo that, only for that to be pulled back again. And inflation, it's slowing, but it's still high. So it's like it's one of those things that I would say, you know to try and predict what to do, how to do it, when to do it. There's a lot of factors, a lot of different changing factors, and it's not easy. And having somebody like Tucker that understands what's going on, an experienced real estate agent like what we have with the Eastside Real Estate Team, to help guide you, to help, quite honestly, tune out the noise so that you can focus on finding a place that will help you build your kind of home, and equity, and a place to raise kids if you choose to do that, or a place to kick the kids out, so you can just downsize, whatever it is. But having professionals help you, I think it's definitely good to have people with experience, like Tucker. So Tucker, how does everybody get a hold of you?
Yep, on all the major platforms, Tucker Maxwell, 425-757-9202. My phone's always on. So really all the social media platforms. But Dan, thank you so much. I want to echo what you just said real quick. And just the fact that you do this podcast every week, I think that's going to be critical for people because it's going to be a roller coaster. We're going to be all over the board. And so checking back in with you on a regular basis is probably the best for people.
Yeah, it's like, hey, do I sell now? Or do I not sell? Do I buy? It's like, well, I don't know. It really does depend. So
Yeah, ask me in 5 minutes.
yeah, right. All right, cool. Well, I sure will have you back next week. So after this short commercial break, we're going to welcome in Eileen Walker. We're going to go from digital money to tactile memories. So you're not going to want to miss this next segment. Come back after this very short commercial break.